My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey folks, welcome back. Today our special guest is Shawn Griffith, zooming in from Texas, and Shawn is involved in a variety of different kinds of investing, not just real estate, but things outside of real estate as well. So some different alternative investments. He's been in and around investing for quite some time. And welcome to the show, Shawn. Great to have you.
Dave, really appreciate you having me on. I appreciate you, having the trust to share your audience with us, and looking forward to the conversation.
Well, let's get started by telling us a little bit about what you guys do at Kraft Capital Investments. What's your buy box, so to speak? What kind of a track record do you guys have of experience so far? What does the company look like as of mid-2025?
Great question. Right now, we are predominantly multifamily syndicators. We buy and sell and manage multifamily properties. Our buy box is typically 200 units in the mid-cities area in the Dallas-Fort Worth metro area. We will look at anything in the DFW metro area, but it's got to be a smoking hot deal for us to look outside of our mid-cities pocket, because we know and love that mid-cities market. We focus on older assets, typically value add. We closed on one February of last year that we put $3.3 million into, and turned it from the ugliest property into the neighborhood to maybe the third or fourth most beautiful property in the neighborhood.
I was going to say, went from the ugliest to the second ugliest. That ain't a great improvement. No, but it went from the ugliest to the third or fourth prettiest apartment in the area.
And,
I like it.
And we've got one that we're raising capital for right now. And we just converted it from a 506B to a 506C, not because we need to advertise for the funds, but just because we want to be able to advertise, because we're actually, anybody that comes in right now is waitlisted. We've already got the money spoken for. We just have to, you know how it is. You got to go through and get all the, I don't count the money until it's in the bank. So
exactly. Yeah.
And then that deal is going to also be about a $2 million rehab once we get everything said and done. But that's kind of our
what
typical.
Kind of rehabs are you doing on these properties typically? What are you doing to bring them up to snuff?
Roofs, exterior repair and makeover, update the color schemes. Interiors are typically, we update them so that you can walk in and it doesn't feel like a 70s product. It's got can lightings in the living area. It's got nice ceiling fans. It's got good fixtures, backsplashes in the kitchen, that kind of stuff, just to make it look more modern.
Nice. Very good. So how long have you guys been operating for with Kraft Capital?
That's kind of a loaded question. Gabe Kraft started the company probably 10 or so years ago as a house flipping company, and he started flipping houses, and then about probably 5 or 6 years ago, pivoted more into multifamily. I got started in multifamily just as an LP investor about a dozen years ago, and then have since transitioned about that same time into, I started my own company, but now I've merged with Kraft Capital because we did 2 or 3 deals together, and we said, okay, we've kind of dated, we kind of like each other. Let's go ahead and formalize this. We can work with each other and move forward. And that's what we've done.
Okay. Interesting.
Yeah, we're in the process of implementing the entrepreneurial operating system in the company. We have a ridiculously huge 10-year vision. We just got through redoing it because the old one didn't really scare us. Well, this one kind of scares us. We're looking at the 10-year vision to be a $1.5 billion company across multiple verticals in not just the real estate space, but other spaces as well.
Well, let's talk a little bit about that, Shawn. So what are some of the other spaces that you guys are currently involved in? And if you're able to, tell us a few of the other ones that one or two of the other ones that you're looking at getting involved in?
Absolutely. Great question. We are involved in, we have a fund to fund model. We're, have a triple net, very niche market, that we are going to be offering. We've got everything set up on that. We're finalizing the offering documents now. Should be live any day now. I know the team's working on it. We have a couple of other offerings in the pipeline for that fund to fund. One of them is a small batch whiskey, which I'm really interested in because, as part of the due diligence, I feel like I need to go and do some
You
taste
got to do
testing.
some taste testing for sure.
Exactly. And we've got some other things in line for that. We've got a debt fund we're looking at. The whiskey and the debt funds, they're all in kind of the in the early stages. Outside of that, we're looking at acquiring companies that are initially directly related to the operation of multifamily business. So, an electrical company, a plumbing company, like a painting and repair type company. So we're looking at those types of things. We may either invest in the company as a partner, or we may actually just outright acquire the company. So we're looking at all the different options there. And then, like I say, the long term is just a very large goal. We want to grow not only our multifamily portfolio and start looking at, maybe doing like a fund where we look at some properties that are longer hold than the typical, what I call fix and flip multifamily model, which is 3 to 5 years.
Yeah, that makes sense, Shawn. So, a couple of questions come to mind. First of all, you're talking about the fund of funds. If people aren't super familiar with that, can you kind of give us a big broad stroke overview of what that means?
Sure. The fund of funds is not a fund itself; it's a business model, and what that means is that we have an offering that we make available, and we target other fund managers that raise money to come and invest in our fund deals as an LP. So let's say you and 10 of your wealthy friends want to invest $5 million. You could put together a fund, and then we're in the process of teaching people how they can make money as a capital raiser, creating a fund and investing in our funds. And we structure it so that the economics are such that their investors can actually get exactly the same or even slightly higher, and I'll emphasize the slightly, returns than if they had invested with us directly.
Because they're pulling their money together in a much bigger chunk, so that gets them more leverage.
Exactly.
Yeah.
And that way we give the fund managers a preferential share class that has better returns, and usually they participate in a little bit more of the upside than the other share classes would.
Got it. Makes sense. Well, thanks for explaining that for us. So, Shawn, a lot of people in the multifamily space have gone through some rocky times over the last few years. How has that affected you guys, if at all?
The last couple of years, it was a beating to raise capital. We, the property that we closed on February of 2024, we actually got that under contract, I believe, in July of 2023. So,
wow,
8 months and 7 contract amendments later, we got it closed. We don't have time. I mean, that's probably about 2 episodes right there just to go through that story. Suffice it to say, there were challenges, some on our side, some on the lender side, some on the seller side. It was just a juggle. We got it done. But from just a general perspective, looking at this as an LP, because I also invest in deals as a limited partner, I'm invested in deals that are cash flowing and we're getting returns. The majority of my deals are either limited returns, not nearly what they had projected, or zero, they're flat.
Yeah.
I've had one deal where we lost 91% of our equity.
Ouch.
And honestly, I think it's going to end up being more than 100% once we get the final K1, because we're going to have depreciation recapture in there, and nobody thought about that.
Yeah.
So, yeah, there's been some challenges. A lot of it comes down to the type of debt you have on your property. So, if you're a GP or an LP, I would say go look at all your investments and see what type of debt it has on it and when the maturity date is on that debt. And if you have anything that matures in the next 18 months, the GP team on that deal better have a plan in place to refinance it sooner than later.
Yeah. Yeah. Good advice, Shawn. So you guys are looking to diversify. Is that part of the reason that you don't want to have all the eggs in the multifamily basket?
Uh, that's part of it. Part of it is, we've talked to a lot of our investors. We've got, I don't know, 4,000 or 5,000 people in our database. Not all of those are investors. Some of them are just potential. Some of them are vendors. But we've talked to a lot of people in that group, and some of them, like me personally, feel like I'm overcommitted. I'm overinvested in real estate. So we're looking at other places to put our money to help balance out cash flow, because I'm getting to that point in my life where I want to develop enough cash flow that I don't worry about, supporting all my bad habits like eating and sleeping under a roof. All of that's just taken care of, right?
Right.
So for that, you need some kind of steady income. Social Security is not going to be it. That's just my personal opinion.
Mm-hmm.
I look at Social Security as gravy. If I get it, great. If I don't, I won't be
okay. You're still fine.
I still want to be okay. So
yeah.
That's why we're looking at some of these things like debt funds and triple net, maybe a car wash, or some other things like that cash flow well.
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com. That makes sense. So, Shawn, when you're getting into these very different kind of asset classes, it must be a whole new learning curve, right? It's a different business model. It's different. Everything's different. So how do you do that? Keep your eye on the ball and not spread yourselves too thin.
Great question. One of the things that we have done, we have created a risk analysis and risk mitigation framework. And part of looking at every deal is there are categories of risk that are the same across all assets. You've got the operation team, whether that's your property management company on a multifamily deal, or it's the back office support on a company, or kind of your sales and marketing team at a company. All of those type of things fall into that. And you have like personnel risk. I'm going to date myself, but years ago, I went to a seminar at the Software Engineering Institute up at Carnegie Mellon, and Dr. Firth referred to what he called a bus-sensitive project. He goes, if your chief engineer gets hit by a bus and your project goes down the tubes, you have a bus-sensitive project. That is high singular personnel risk. And so if you look at a company, like if I'm the only GP on a deal and, you invested with me and I win the lottery and move to Tahiti or whatever, I'm out of the picture.
Or get hit
now.
by a bus.
Or I get hit by a bus.
Yep.
Whatever reason, I'm out of the picture. What are you going to do? How is that deal going to perform? And who's going to take over? And, there's all these questions. So we put together a framework that I won't say we look at all of the possibilities, right? Nobody can know what all the possibilities are,
Yeah.
but we try to categorize the major things that can happen. And then we rank the investment on, what do we do? I mean, we get due diligence information in, and we go in and we go, okay, there's only one point of contact here. This is the key person. Well, that's a high risk. What do we do to mitigate that? Maybe we work with that person and help them train an assistant that can
Right.
step in. So so yes, there are a lot of things. There's a lot of differences, but there's also a lot of similarity. Risk is risk. You just have to be able to identify it, and if you can quantify it. Sometimes it's either yes or no risk. It's like, yes, we have risk, or no, we don't. Areas where we
deal breaker risk versus non-deal breaker risk, I guess.
Exactly. And then we're working on a framework where we can put together I think it's, I don't know, 2 or 3 page PDF that gives the risk scoring that we can give to a potential investor that says, here's what we've looked at, and here's what we think the risk areas are. You as an investor should still do your own due diligence, but this is what, and that lets them know, hey, here's what we've looked at.
Smart. Yeah, so you show them the warts and all, right? It's not all sunshine and flowers.
Oh yeah.
You show
No. Anybody that tells you, oh, this is the greatest thing since sliced bread, well, they're not showing you the 2 fingers they have missing from the last time they sliced something.
From the last bread slicer.
Yeah.
Yeah, well put, Shawn. Hey, time flies when we're having fun. I'm sure we're going to have some folks here interested in connecting with you. What's the best way for them to do that?
Thanks, Dave. It's probably our website, Kraft with a C, Kraft Capital Investments with an S.com.
Perfect. Kraftcapitalinvestments.com. We'll have that in the show notes as well. Hey, thanks very much for being on the show, Shawn.
Appreciate it, Dave. Thank you.
All right, everybody. See you on the next one. Hey there. I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.